Joining me now is Kevin Mahn. He's the president of Hennion and Walsh. Good morning to you.
Okay. Good morning, Alison. How are you today?
I'm doing great. I'm curious to get your opinion on today's inflation data, coupled with what we learned yesterday. What do you think all of this data so far tells us about the state of the U.S. economy?
Now, relatively strong inflation report. Clearly, inflation is not moving higher, but unfortunately, it's also not moving any closer to the Fed's 2% goal. That leaves the Federal Reserve between a rock and a hard place as the economy is starting to slow. According to the Atlanta Fed's most recent GDP Now forecast, they expect the economy to slow by 2.4% in the first quarter. As we know, if in fact real GDP is negative for 2 consecutive quarters, that meets the technical definition of recession. I don't think we're going to get there, but certainly that gives some concern to the Fed, who may start cutting interest rates sooner than many earlier anticipated. Now, the Fed meets next week. I think they pause again, but I wouldn't be surprised if the Fed starts to indicate that first rate cut of 2025 may take place during the second quarter of this year.
Do you think this change of pace of the Fed is going to wind up spooking the markets, though?
I think the markets are actually looking for that reprieve from the Federal Reserve. There's so much uncertainty right now, Alison, whether it's with respect to tariffs, whether it's respect to the slowing economy. What will the Fed do or not do with interest rates? The overspend, perhaps, with respect to the AI revolution, and then some of the concerning forward-looking guidance that came out of this past earnings season. All of that creates the potential that the economy could slow even more. How do we alleviate that? Well, maybe the Fed doesn't just cut by 2 times this year. Maybe they cut by as many as 3 or 4 times. I think if the Fed were to cut next week, though, to your point, that would send a concerning message to investors.
What do you think we're getting from the overseas markets? What are the overseas markets seeing that we're not seeing here in the U.S.? We did see European markets make broad gains on Wednesday, and this is happening even after the EU announced retaliatory tariffs, on a swath of U.S. imports, and with, of course, President Trump suggesting that more steps will follow.
Yeah, obviously the back and forth with the tariffs adds another level of uncertainty and has added to the market volatility we've seen thus far in 2025. As a result of all that volatility, we've seen changes in market leadership. The Mag 7 is no longer leading the way. Information and technology and consumer discretionary are the worst performing sectors, whereas those more defensive sectors such as healthcare, utilities, and consumer staples are now leading the way. But we're also seeing value outperform growth. And to your question, we're seeing international outperform U.S. Now, I don't know if that theme is going to hold for the balance of this year, but it does serve as a reminder about the potential benefits to diversifying your portfolio geographically. I would lean more into international developed markets right now than I would emerging markets, but certainly there's a case to be made for adding international exposure to your portfolios.
And so we are talking about diversification. Are you also talking about bonds? Is this a time for bonds to shine?
Yes, excellent segue and great question. I think it's always a good time for bonds if, in fact, your investment objective is income oriented. Or in other words, if you're not necessarily looking for growth out of your portfolio, but you're in retirement and you want income to sustain your lifestyle throughout retirement, what better place to turn than fixed income securities? If you're in a high tax bracket, look to municipal bonds or municipal bond, even closed-end funds. But don't forget about preferred stocks as well. Preferred stocks can offer a relatively high level of income and the potential now for total return, given that many preferred stocks are trading below their $25 price because of the fallout that had taken place since the regional banking crisis, remembering that most of the issuers of preferred securities are banks. So preferred securities, municipal bonds, municipal closed-end funds, I think look very attractive for income-oriented investors in 2025.
All right, so we have March Madness on the basketball court. We've got madness in the stock market, and with all this uncertainty about tariffs, unlikely to stop anytime soon. What's the mindset investors should be for this roller coaster?
Yes, this is a very unique March Madness season, and hopefully it ends with one of the two UConn teams winning a national championship. But I digress. In terms of how investors should treat this volatility, first and foremost, Allison, this volatility shouldn't be anything new to investors. It was largely absent from the markets the last 2 years, but now it's picked up pace again. And the worst thing an investor can do in the face of headline risk or the face of short-term volatility is abandon their longer-term financial plans. I always go back to this one statistics that I learned based upon a University of Michigan professor that looked at 31 consecutive years of stock market returns. Now, this study is somewhat dated, but the conclusions hold true, as that study found that 95% of the stock market returns over those 31 years took place on just 1% of the trading days. Now, I certainly don't know when those 1% of the trading days are going to be, but rest assured, if you're not in the market on those 1% of the trading days, you're likely to miss out on the most significant returns that the market has to offer. And generally, Allison, come after big pullbacks. So stay true to your risk tolerance, stay invested, build diversification, and guide yourself towards your longer term financial plan as opposed to shorter term results.
Great advice, in theory. Let's see if we've got the strong stomachs to handle, all the news headlines. I know that the market is certainly following. Kevin Mahn, thanks so much for your expertise today, president of Hennion and Walsh.